Hey, what's up everybody? This is Evan Carthy from evancarthy.com. Today I'm going to go over a couple charts on how to trade the TVIX stock. It's basically a two-timed leverage fund that inversely goes against the S&P 500. So basically when the S&P 500 goes up, the TVIX goes down, and when the S&P 500 goes down, the TVIX goes up. So you can read more about it here in in the post here, basically the little background info, how it works, got some links in there and things like that. But what I'm going to go over here for this video is going to be the charts. So the two time frames we looked at in the video were the 15-minute chart and then the daily chart. So excuse me, we're going to start with the 15-minute chart right here. So basically what we have going on right here is the 123 to 161 long setup right here. And when price came down, hit the 123.6 Fibonacci extension level, that initiated the trade. We're using that pivot point up here, that yellow circle, that low pivot point in that circle. Price came up, barely took the 38% line, but that's enough to give it a valid pullback for this trade to be initiated. So when price hit the orange line down here, that initiated the trade. So the current exit level we're looking at is the 0% Fibonacci line. It's at 1479, but I like to have my exit a little bit lower. So looking at about 1475 over there to get out. But if price goes down and hits the green line down here, which is the 1.618 Fibonacci extension level, then we move the exits down to the top of the green box right here, so say about 1435-ish, something like that for that exit. So far it hasn't hit down there, so still the current exit is up here at about 1475. And then finally, if price didn't hit that exit, if it hits the green box bottom down here, but never hits that exit up there, and keeps on going down and hits the 200% Fibonacci extension level, then all exit would move to the top of the yellow box, which would be about 1370. So that would be the last time we move the exit level, and if price continues to go down without hitting that exit, we wouldn't move the exit anymore. You just get in at a better price, and you leave your exit at about around 1370-ish or something like that. But as you can see, the TVIX went up today, and so what that means is that the S&P 500 went down some. So definitely the way the setup is for the short-term time frame for the next day or two, I would definitely be more on the bearish side for the S&P 500, especially until this comes up and gets reached up here. So if this goes down tomorrow, and that just means that the S&P 500 went up, but eventually one of these are going to come up and get hit to complete this trade. So we will have a down day or two in S&P 500 until this short-term 15-minute time frame does get completed. So let's remove the drawing tools and go over to the old daily chart, because if I remember correctly, let me look at this right there. Okay, yeah, so we have another very similar setup right there that we had in the excuse me, I need to look at this closer. I apologize for that. That was April 18, 32.89. Okay, I just want to make sure we're looking at the same thing here. So yeah, so using this and this right here, this is again going to be the what was it? 1567, 32.89 of April of 18. And that's it. Yeah, there we go. So yeah, that's it right there. So using that pivot point high right there, apologize for that, should have been a little bit better prepared for that. But using that pivot high right there, that pivot low right there, price came up to 38, so that's the retracement to make this trade valid right here. So in the daily chart for the TVIX right here, for a longer term time frame, TVIX has been going down, so of course that means the S&P 500 has been going up. But just the other day, yesterday in fact, it came down here to hit the 123.6 extension level, and so that initiated a long trade for the TVIX. So right now we are in a long trade, so for a little bit longer term time frame, we are definitely looking at a there's going to be some type of pullback or correction in the S&P 500 sooner than later. I'm not sure when that's going to happen, but it eventually will happen here on a little bit longer term time frame, and it's going to be obviously more of a pullback or a correction than the 15-minute time frame will. But that's important to note because so we're in this trade right here. The current exit is top of the yellow box up there around 1845. Initiated when it came down here at the 123.6 extension level. Again, same rules as the 15-minute chart. If that exit doesn't get hit, price comes down, hits the 1.618 Fibonacci extension level. The exits move to just below top of the green box right there, so about 1425-ish. I like using rounder numbers. But then if that exit doesn't get hit, and price comes down, hits the 200% Fibonacci extension level, then all exits get moved to just below the top of the tail box right there, about 720-ish, something like that. So we're definitely long set for the TVIX, so that is going to mean that sooner or later there's going to be some type of pullback or correction for the S&P 500 in a longer term time frame. So that is definitely something to think about. You know, if you're trading stocks out there and you're long on the market. And then look at this right here. Just want to highlight that. We do have a gap down right there. Now, if it was a gap up, it would be more. I give more weight to if something's going up and you get a gap going up, because about 90% of the time that gap will come down to be filled. In the downtrend, not so much. It's not as high, but it's still interesting to notice a gap right there for it. So that's that. In the like I said, a 15-minute chart, we're definitely looking for a down day or two in the S&P 500 coming up next day or so. And then in the long-term time frame, we've entered a long setup for the TVIX. Doesn't mean the S&P 500 couldn't still keep going up, because there's still got a couple entry levels down here that could be filled. But it's just something to take note of, because this could signal that if this exit is going here and get hit, then it could happen, because this is a long setup in the TVIX, which means that there will be some pullback or correction in the S&P 500 eventually. Definitely if price comes down all the way down here and hits around 64 cents or so, and that trade is still active, then definitely I would not be long the S&P 500 at all, because it's eventually going to go up and take out that one. But anyways, so that's the TVIX. Personally, I do not trade it. I do not trade leverage stocks. This is 2-time leverage stocks. So what that means is, which I addressed in the post, is there's a fee involved every single day for it, and so it starts eating away any profits you've developed or you have from trading this. So if you do trade the TVIX, it needs to be in an extremely short time frame, preferably intraday, and it's typically used to time big types of moves, which for me is extremely hard to do. So that's the reason why I do not use it, but it is something to kind of look at, because it gives a good indication of what you can expect for a movement for the S&P 500 when you have a longer short setup that has initialized in a TVIX. So that's it. Hope that helped. Have a good one. Talk to you later. Bye.